Your life has options. Option trading education. Just like life, the stock market is full of options. Learn more today.
Hello, this is Greg Tarpening, and thank you for following Your Life Has Options. This evening, I'll be going through the next scorecard, which is for the month of April, and we'll see how we did. As I mentioned in the short video I did just the other day, that the banks that I'd moved into all went down when the situation in Iran kicked off. So all those banks were assigned to me, and now I own them. So we'll see what happened with that. The first thing you'll notice, I think, is that Bank of America, BAC, and PNC, I have two lines for each of those because I have stocks I own at two different prices. And I just decided to play those at the two different prices I had them. Not much interesting on Bank of America. I was able to sell the calls on those stocks that I own and make above my target amount, so I'm perfectly happy with that. PNC, same thing. On the first one, I was able to make the amount needed. The other one doesn't have any income yet because that was all scored in the previous month. And actually, there was a bit of a loss on rolling that forward to get it up to the price where I wanted it. Now that I'm approaching the price that I like and that the price has come down, I'm actually able to roll that particular stock forward and up. So this is a good time to learn about rolling forward and up. Forward simply means you move your expiration date another 30 days, usually further out. So I would buy back the expiration, which in this case is on the 2nd of April, which just looking at that this evening is at 67 cents, the last one that traded. And I can then resell that on May 15th for $3.40 was the last one. Now we'll see if that actually holds when I'm able to make that transaction tomorrow. I don't know because one never quite knows where the market's going to go. But if something like that were to hold, I'd be making about 1.29% on the difference between selling 30 days further out and buying it back. That's just a week away. And so that would be a transaction I would do because it exceeds my target amount. Next down the line is Pfizer, PFE. On that particular stock, I bought it down another $200 so that I was able to sell a strike that was above my target. So that's what I did. That was my choice for writing something down so I could make the premium I wanted. Next on my list is Citigroup, which I was able just to sell the call on. I didn't make my target amount on that one, but it's my current assumption that that stock will be going up. If that doesn't happen in the next month, I'll probably begin working that one down as well. Then on to Zions. Zions is another one that's a really good candidate to roll forward and up. It closed today at 57.25, so it's approaching my strike price. But in this particular case, I will not be doing anything with that one tomorrow. I'll just let it ride out for a while because the gain I could make buying it back and then reselling it a month later is only about 11 cents right now. Now, as you get closer to the expiration date, generally the amount of the call premium that you can buy it back for will begin to approach closer to the difference between your strike price and the actual market price. So it's a good bet to just wait on that one. And if it doesn't meet your goal, which in my case is the 0.75% per month, then you're better off not doing that roll forward. U.S. Bank and First Fifth and Truist, all of those, I was simply able to sell the call and make a reasonable premium on those, so that's what I did. Moving on now to the put section. I have Citigroup that last month I rolled that down and forward. I had it at a strike of 117, and as the stock went down, I didn't want to take it at $1.17, and I was able to move it down to $115 a share and make my target amount. So I did. And then Devon Oil and Morgan Stanley were my last two plays. Morgan Stanley's been a lot of fun the last couple of months. And this month I was able to make 2.68% on the premium. So you take all of that together, plus the interest that I had from 2 months ago when most of my positions were in puts, so I still earn interest on that money while it's there. $358 in interest, all of that together, I made an actual income of over $2,500. My target amount for 0.75% was $18.98, so I'm over $500, almost $600 over my target amount, so I'm perfectly happy with that, and we'll see how it goes going forward. So that's this month's scorecard. Thank you for watching, and we'll talk to you again soon.